By far the best investment you can make is in yourself.
Hello investors, it's Ben here with Market Evolution, here to bring you much needed information about market analysis, trends, and what you can do to become financially free. Full disclosure, I'm not a financial advisor, just someone who knows what to look for in the markets. As many people know, the economy has seen better days. For the past 4 months, the stock market has seen major bear market rally, which may lead investors to believe that the worst is behind us. Although some high-level bank managers and politicians might have you believing we're in the clear, the reality is a lot darker than it may seem. Some people may know about the S&P 500, but for those who don't, it's basically a pooled index fund of the top 500 publicly traded companies in the US market. Many people follow this specific fund as a representation of the American economy. This chart shows the S&P 500 dated back to 1983 when it was first created, and all the most recent crashes, just like the dot-com bubble here in 2001 and the financial crisis here in 2008. These crashes happen for many reasons but are controlled by the central banks. The Federal Reserve, otherwise known as the Fed, is the American central bank. They use their power of raising and lowering interest rates to control the economy. With this chart showing the federal fund rate, we see we're currently sitting at 4.75%, which is higher than what happened in 2020 and close to what happened in 2008. Let's imagine that the average American owns a house with a bank, and the Fed decides to raise interest rates by an extra 4.75%. That will be coming out of the homeowner's pocket in relation to whatever they owe on the house. Over time, this chips away at the economy, which results in less consumer spending, which leads to failing businesses, which then leads to economies crashing. A few amount of people can get rich from these crashes. You will be that few. The chart shows the relationship between the previous two charts. If we look here, we see the most recent crash in the market in sync with the Federal Reserve Fund. Like in 2001, you can see it dropped off right here. Basically what happens is the Federal Reserve will raise their interest rates, and when they do that, they don't want to pause. Now this pause is a couple months, maybe a year, but when this little dip happens, which is called the Fed pivot, is basically when the Federal Reserve understands that the markets are going to shit and are not doing so well. So what they do is they cut the fund rate quick in order to kind of save the market. And you can see every time they do that, the market does crash. It's a weird game that happens, but they know what they're doing. And basically, if you understand this, you can basically master the market and, become rich in a short amount of time, or every crash that happens, as you can see. Every 10 or so years, a market crash does happen. And right now, we're in the midst of one, as we see it going up here. So if you can understand that it will raise more, and then it will go on a little dry run here, as it did in 2008, 2001, and 2020. And then when they start to pivot, in about a couple months from now, you'll see that the markets will start to crash. We will have a recession. These market crashes are inevitable due to easy money being given away. The most recent one was because of America's stimulus checks and the Federal Reserve printing out trillions of dollars. In Canada, it was CERB money, national or central bank giving away multiple of these checks. Be sure to subscribe, where you can find all the information you need to become financially free. I will be posting at least one of these videos a week, so hit that like button, and I'll see you in the next one.